help in your education process. So in that video, towards the end with the US dollar analysis, I said that we're going to now look at certain markets that are correlated with the US dollar, whether they are inversely correlated or directly correlated, whichever format, we're going to look at that. And certain markets that have shown particular movements that you could make money off of, right? And I think those markets have been crude oil, gold, a few others, but I'm going to focus on gold and crude oil, okay? And just like the normal format, I'm going to now switch to looking at the charts. And then after we look at the charts, we'll go over a summary of what we're thinking about that market, okay? All right, so bear with me as I'm doing that. Okay, so you should be able to see my screen and the charts that we're looking at. And just so that I can point out what we'll be looking at. And bear with me as I'm moving these tools around. Right now, you're looking at the gold market, as you can see right here. I'm going to change the color of my pencil there so that things are clearer. There you go. So this is the gold market. And then you can see I'm looking at a daily chart. Okay, now again, for people who are joining in who may not have seen the other videos that I've done, whenever I'm looking at the chart, usually I'll use the same trading view kind of database, right? So the chart format will be a candlestick chart. And then on the top left-hand corner of your screen is where you'll see the name of the contract or the market that I'm looking at. Like for example, it says gold right there, okay? And then on top of that, there'll be a small square that tells you kind of the timeline of the chart. If it's a D, it means it's a daily chart. If it's a W, it means it's a weekly chart. And if it's a M, it means it's a monthly chart, okay? So right now we're looking at a daily chart. And what does that mean? That means each of these candles that are inside of this, on the top of the chart, because the chart is divided into two parts. One is the price of gold on top, like which is right here, right? So I'm scribbling around. Okay, I'm going to erase that. And then at the bottom, there's a mathematical or technical indicator. So the chart is divided into two parts. Okay, so most of the time I'll be focused on the price action. And then when it's necessary, I will let you know how we use the indicator as a potential signal of how to get into a market or get out of a market, okay? But for now, I'm gonna clear the screen again. And then this is the gold market. It's a daily chart. So at the bottom, what would you start seeing? You'll be seeing months at the bottom, right? Instead of years, because in a monthly chart, you'll see years. And then inside of a month, you'll see these candles. And each candle, again, I'm just going to point out, is an entire day's worth of movement. That's what it is, okay? So each candle is a day, okay? So once I clear that out, let's pay attention to something that's going on. That's very interesting. And there's two parts here that I want you to pay attention to. First, keep in mind that the gold market, actually, if we go back on the chart, you'll see that it kind of bottomed out into December 2015 and had a very strong run-up from December 2015 to November 2016, like just before the election, right? And right after the election, obviously the election of Trump into office was a shocking kind of result, even though there was a change that a lot of people thought that was needed. People didn't think that he would get elected, right? So when that happened, what was interesting is inside of the night, gold went up significantly, but then by the end of the day, it closed lower, which is, there's a perfect candle formation here that was telling you what gold was going to do for the next couple of weeks or so. And then gold came down quite a bit after the election. You can see that, right? And then suddenly, right into December 2016, it held a support level. Now I'm going to switch this chart to a monthly chart to show why that support level is important. But when it held that support level, it curled around, right? And then started going higher from the beginning of the year. And it's gone higher and higher and higher and higher. And it's almost about to break out of this region, right? So why is this important? What's going on, right? And what can you glean from the gold daily chart that might be telling you so much more than just the price of gold going higher, right? And here's how you dissect this chart, in my opinion, at least, right? First, obviously, you can see that gold since December has had a very good run up, okay? And it's run up about maybe 14% or so from this low here to this high. So that's a very strong run up in a few months. And then you can see something in this chart that this area around 1300 is strong resistance area. You can see that, right? Even before it was a resistance area, then this has ended up being resistance, another resistance, and this is another resistance. This is what we call like a triple top that's happening here, okay? Now, what's interesting to me is as we keep coming up to this 1300 level and it gets back down, 1300 and then back down, 1300 and then back down, one of these days, it's going to want to show you what it wants to do. Now, there was a very good trade on its way to 1300, but when you get to 1300, it gets a little choppy. So it's good to get out of the trade, like if you're trading paper contracts, like futures contracts or things like that, and then go back in on pullbacks to try to make some short-term gains, right? But here's what's interesting. If gold breaks through this 1300 level, and meaning it closes above that 1300 or 1307, 1306 level, right? And closes for a day or two over that, the next target zone is going to be somewhere in the 1380s, right here, 1360, 1380. So it's going to be a big run, quick, right? That's a potential run up. And what's interesting is when you look at a dollar chart, it's at the opposite end at a support level. So if it breaks through that support level, maybe that could be the propeller of this gold going up another $80 or so from where it is now, okay? So this is how you look at trades and kind of see what's going on. The other interesting thing that I want to mention and I want to kind of point out in the gold chart is gold, if you've been trading it for a while, or if you've traded it for any periods of time, you'll know that most people look at gold as a safe haven instrument, right? As a market that responds to uncertain events or things that are troubling, like terrorist activities, bankruptcies, nonsensical things like that, right? But here's what's interesting. In 2013, 2014, I'm sure everyone remembers that when Greece was becoming insolvent, when Cyprus went insolvent, right? Both are European Union countries, and they were like on the world stage, like they were going bankrupt in front of the world, right? What did most people expect gold to do? They thought gold would go higher, but it didn't. Again, revisiting a point that I've mentioned before. When a market does not react the way it's supposed to react to certain fundamental triggers that are specific to that market, then you better pay attention to that movement. And what was interesting is as more things piled on, like, Cyprus went insolvent, people were lining up in Europe, trying to take money out of their ATMs. Greece went insolvent. They started freezing people's money in bank accounts and everything, right? Gold continued to come down. 2013, 2014. Now, here's what's interesting. 2015 comes along. We raise interest rates, and a couple months later, gold breaks out of a multi-year trend line and starts going higher. Very interesting. Why is that? Why is that interesting? Because when you raise interest rates, the wisdom, like what people say, right? I wouldn't say trader wisdom, but what people say is that the gold market should come down. But it didn't. So again, the market was telling you, remember how I said the market will always tell you what to do? Like neon signs in Vegas, right? And I'll keep repeating that, neon signs in Vegas, right? It's like that clear. The market was saying, hey, pay attention to me. Hey, pay attention to me. Because gold went up when interest rates went up. That was strange. I was actually trading the market. And once when they raised interest rates, gold actually went up like $30, $40 within a day. Recently, very strange. right? And here's the interesting thing. Since then, since 2015, I'm going to change this chart so you can actually see that happening, right? I'm going to change this from a daily to a monthly. So pay attention to the left-hand screen. See, you can see all the timelines coming up there. And then I'm going to change it to a monthly. And then on a monthly chart, I'm going to just show you what I meant by breaking out of a multi-year trend line. Like this was this is gold again, see, monthly chart at the bottom. Now you're going to see years, right? And what happened was gold was inside of this trend line for a few years and then suddenly broke out of it in December 2015, right here. See that? Because this is a 2-year time period and the middle is 2016, so that's around December, right here. This is December. Why is that important? Like I said, it broke out after we raised interest rates. Now, here's the interesting thing. Since December 2015 up until November 2016, gold went up a significant percentage, about 30% or more. And then after the elections, it took a breather, came back. And remember how I said when we were looking at the daily chart, hey, I'm going to talk about why that retracement towards December is going to be important and why holding that support level is going to be important. Now, this monthly chart will allow you to visualize that, because after that pullback, the gold market stopped in December of 2016 above the low from December of 2015. It didn't go ahead and breach the low from December 2015. So that was an added probability factor for the structure of the gold chart looking better and better, okay? And then since then, gold has started moving higher again, right? So this is that monthly chart to kind of show you what I was talking about, how gold kind of bottomed out in December 2015, then jumped out of this trend line, broke out of this trend line, and then started going higher. And in that time period, in 2017, and what I'm going to do is I'm going to change this into a daily chart quick, so you can visualize that. Gold goes up, as we talked about right here. Gold starts going higher again since December 2016. And during that time, the dollar has come down. Very strange behavior, because the fundamental events don't support that, especially in the monetary policy side of it. Now, here's the other thing that I want you to pay attention to. And I don't want this video to go too long, because I want you to get the gist or the most important parts of the information, and then we'll go from there. But here's the interesting thing. If you look at gold, you'll see that in this part of the chart, after the move up, gold tends to have big up days inside of the chart. Do you see that? Which is different to before. Before, it wasn't having that big up days in this run up. What's happening these days? Like what is significant about that? Certain fundamental events are happening. For example, the North Korean people are saying something about their missiles, and then Trump is responding to it, and then suddenly gold goes up $30 within a day, or $20 within a day. Goes higher. Or the Federal Reserve talks about, start buying back asset purchases and things like that, or getting out of asset purchases from the Federal Reserve book, right, of assets. Then gold goes up. Or some terrorist activity happens in London or somewhere in Europe, and then gold goes up. Why is that important? Because the nature of the gold market has changed since 2013, 2014. Remember how I said when Greece was going bankrupt, when Cyprus was going bankrupt, gold wasn't reacting when it should be reacting? But now, when you talk about missiles and North Korea and Trump firing words between each other, gold goes up. Terrorist activity, gold goes up. Some fundamental issue, gold goes up. That's adding to the positive structure of the gold. So this is a scenario where I believe, as a commodities trader, I've seen this, that when the fusion of fundamental events and technical levels come together. So when the technical and
content is for educational purposes only. This is not investment advice from Bullionite LLC. There is always risk for substantial losses in investing and or trading through any financial instrument with or without this or any other type of advertised product. Past performances are not indicative of future results. Different types of investments involve varying degrees of risk. Specific strategies or education presented by Bullionite LLC and its associates in this video are for educational purposes only.